CPI numbers are coming out tomorrow morning and the markets are likely to spike. And we're going to be live for the event, so don't forget to tune into the live stream. You can subscribe and hit the notification bell. It'll pop up a notification when we go live, as we're going to be reacting to the latest numbers coming out in the inflation department. And this is definitely a really anticipated release, as CPI has sort of been seen to peak back in June of 2022. The question is, are we going to continue to see an on par, on pace decline in inflation, or will there be any surprises? In this video, we'll go over some setups and ideas that I'm watching for tomorrow's price action. Let's jump in. So yeah, it's a big, heavy anticipated release, probably one of the biggest ones of the month, as inflation is expected to continue to decline. Now, you can see that forward projections for tomorrow, if we go to the economic news tab here on the Edge Finder, is for numbers to come out at 6.2%. This is the inflation rate year over year. Of course, we will also have to pay attention to core CPI as well, which both numbers will present themselves at 8:30 a.m. US Eastern tomorrow morning. So as we go into, of course, that major announcement, the question will be, what impact will it have on the market? And three assets that I want to go over with you guys today are the USD, the S&P, and gold. Okay, so all three of these have a distinct sort of reaction to CPI numbers coming out either hotter than expected, cooler than expected, or as expected. And we'll go over each one of those scenarios together right now. So the first one I want to talk about is, of course, a position that I am in. Here is USDJPY, a trade that I already have long and do plan on holding into the news if the market continues to allow me to hold on to this trade. What do I mean by that? Well, I entered this trade over here. Here is my long position, 124,000 units. We're floating $1,600 at the time of recording this video, and we are sitting at a level of resistance. So what you'll also notice is that this orange line, which represents my stop loss, has actually been trailed into profit. And the reason for this is I know CPI numbers are coming as much of the market waits in anticipation. I don't expect the markets to get too volatile before, but that spike could lead to this market going either direction. It could go shooting to the upside or shooting to the downside. And I think we need to discuss the context for the newer traders out there very quickly. If CPI numbers come out greater than expected, if we come out with a higher than expected CPI number, this dollar is likely to absolutely fly, right? Probably a clean, massive break above the previous high, as CPI numbers could, of course, be if greater than expected at that 6.2%, meaning CPI numbers come out. If it comes out anywhere higher than 6.2%, you likely get a screaming breakout to the upside there on the dollar against the Japanese yen and the dollar across the board, euro dollar, pound dollar. We'll take a look perhaps at some of those as well in a moment. Recently, a new prop firm reached out to me and told me a little bit about their mission to create a funding program for traders by traders. They said they really appreciated my channel and my message about prop firms, how you need to be careful with certain ones, and what to look for in a good prop firm. The prop firm I'm talking about is FX2. So in their mission to create sort of a next generation prop firm, they shared a little bit about their message and about their goal for their traders. One thing that they made mention of too is a lot of the prop firms out there funding people with not actually real accounts or just demo accounts, and assured me that they actually fund their traders with real money. Going against the casino model, FX2 got a really cool sort of actual prop firm setup where you can actually get real funding once you actually pass their test. Because they don't have the casino model, when you actually make money for FX2, they win and you win. It's a win-win scenario, as it should be when working with a funding program. And they've created an exceedingly simple way to get funded. They have a relatively straightforward process for taking their examination, getting funded, and getting right into live capital. Their evaluation is incredibly simple with just 3 simple trading rules that I would encourage you to check out for yourself using the link down below in the description. A couple cool things about this evaluation: they allow you to hold trades over the weekend, they don't require a stop loss, and there's not a time limit when taking this examination, so you can take your time to actually go through the examination process. So if you're interested in hearing more about FX2, down below in the description there will be a link to check out FX2, and thank you to them for sponsoring today's video. That would be scenario number 1. And scenario number 2, which I'm prepared for also, is of course if numbers come out less than expected. If we get a continued cooling in CPI numbers, either at number expected at 6.2 or below it, you're probably going to see some sort of continued decline, some sort of pullback here on the dollar yen, as well as other pairs. Now, again, I'm happy to hold on to my dollar yen trade as long as we can hold above support here at 131.8. For those of you guys who are also watching this trade or inside of our Discord channel where I shared this trade, you can see here is the dollar yen position that I took with the full breakdown. If you're not already in the Discord, we do have a free Discord that you should definitely join. If you're not in the free Discord before tomorrow's news, then I can't help you there. You got to join. Come join the free Discord, which will be linked in the description so that you can get access to our free daily analysis. And if you sign up for the VIP group, you can also see the trades that I'm taking, as well as Frank and Ivan, the two compadres I have in my in the Discord here. So make sure to join that free Discord if you're not already in there. And again, we'll continue to watch the dollar yen for those of you who are watching along with my trades. And of course, some other things that I want to discuss, which is of course the indices and gold. I'm going to do one more US dollar cross that I'm interested in, which is the euro. Now, if the euro does continue to push up, I'll tell you right now that I'm very interested on the short side. And I'll show you that from the Edge Finder if we go to the watch list. Going into this, I can't help but tell you guys that I am very much more on the bullish side of the dollar. Now, does that mean the dollar is going to spike up on the news? Maybe, maybe not. But overall, if it does spike to the downside, I'll be looking for an opportunity to pick up some dollar positions. And when I say downside, I mean the USD declining, which could cause other currencies like the euro and the Australian dollar to appreciate, relatively speaking. Now, you'll notice right here that Euro USD comes in as a strong sell on the Edge Finder. And if we pull up the individual sheet for a Euro USD, then this is what we get. We get a -8 downward trend projection. If we take a look at retail traders, the retail crowd is piled into a long trade on the euro. You've got also in the economics department, favorite across the board is the US dollar. You have higher than expected or higher GDP in the US than in Europe. You have inflation numbers that are better or more contained compared to Europe's higher 8.5% inflation. We have 6.5 in the US, which again, big number tomorrow. We'll release, we'll see if that continues to widen in discrepancy between Europe and the US. A very interesting point to pay attention to as well. Unemployment. Numbers are lower in the US, which of course is better. You want more jobs for an economy, and then a higher, more attractive interest rate in the US. So across the board, I want Euro USD on the short side, but I need to be patient, and we'll have to watch to see the number come out tomorrow. If that number lends a stronger Euro appreciation, if we can get up into this 38.2, I have my scope on 1.080. This is where I'll be looking to potentially get short the euro against the dollar on that fresh news tomorrow. We'll have to see again if that comes into play. If it breaks to the low side, you also have a scenario where I could potentially get short, which would be a breakout, and perhaps going into the remainder of the week, we get some sort of retest, looking for the continuation. But predominantly bearish on euro, bullish on the dollar, and that extends to other currency crosses as well, which we could spend a whole, episode just on USD pairs. I like euro dollar short, dollar yen long. Those are my two main focuses currently when looking at the currency side of things. Now, we'll take a look at the next one, of course, which is gold. How is gold going to fare in all of this volatility with CPI numbers around the corner? I'll be the first one to say, I don't want to lead you guys on. I don't know what the news is going to do, and I'm not here to forecast what CPI is going to do either. I'm here to react. And so with CPI numbers coming out tomorrow, let's do the same comparison. CPI comes out, let's say, hotter than expected tomorrow. We get CPI numbers screaming hot, and inflation fears run rampant again. What's going to happen? Likely, gold comes crashing down underneath the lows, and perhaps sellers continue to sort of take control of this market and push it maybe down to like the 1800s, right? Or the low 1800s, I'm sorry. That's something that we have to be aware of, is that if CPI numbers come out hotter than expected, gold will likely continue to plummet through lows, and on retests, primarily biased to the sell side in my opinion here. Now, if the opposite effect happens, if we get CPI numbers cooling, gold may actually sort of resume what it had started this year, which is an overall climb. Now, for me, this one's tougher because I don't necessarily have a bullish price action view on the gold market. You can actually kind of see that, if anything, price action here looks pretty ugly. You had this fall apart of this upward trend. You can see if we get rid of the drawing, you had this upward trend, completely fell apart, broke through levels of support, and now even, doesn't even come back to hit resistance. It just fell apart before there. So we really would need to see something special for this thing to start its bullish trend again. And like I said, you'd probably need to start seeing something pretty big, like a breakout above this key level here. 1890 comes to play, right? So if price was to get strong, you'd need to see breaks above these levels decisively in order to really attract buyers, in my personal opinion. So I don't really love this on the long side. If anything, gold would be more of a short side play if numbers come out hotter than expected here in the CPI department tomorrow. So something to pay attention to there. Now on to the indices. Now this one is tricky because the S&P 500 rallying here prior to the news. CPI numbers have not even come out yet, and we've seen the S&P and the NASDAQ hold that 4060 level here for the S&P. And, this one also is something I do want to actually be long on. Predominantly, I'm interested in the NASDAQ 100. And you can see the reason I am in that camp is because if we take a look at the watch list tab, you can see NASDAQ 100 shows up as a +3, giving it a buy rating on the Edge Finder. So watching this going into this week, I wanted this 12,200 mark, and it actually briefly touched my entry level. I unfortunately was not present and missed that trade. So a bit of an unfortunate one there, but congrats to NASDAQ 100 bulls. I would like to be with you. And if we do get the retest on the CPI numbers, this brings me to my trade idea, would be a retest of these lows. Upon that CPI number, I will look to try and join this upward trend with stops below. If the market falls apart here, I'm going to just stop out. I'm not a hero when it comes to markets. I don't know the future. My goal is to stop out quickly if I'm wrong. And so if a trade setup comes in here, right at that 12,200 mark that I want, a lenient stop loss would be below these lows here, and then looking for the longer term trend to the upside to continue. This is a much bigger swing trade. Now, you could tighten this up for sure. You could probably get a little bit more granular with it and say, well, hey, we shouldn't see much of a break below the lows, and then we can tighten this up for more of a swing, a short-term swing trade, or even mid to short-term swing trade, right? Would be a pullback into this area, looking for a retest potentially of those highs, gives you an incredible risk to reward. So I really like the NASDAQ. That's a 6, almost 7-to-1 risk to reward on this trade. This is one of my favorite trade setups right now. If it can come into play this week, I'll be waiting for it. I've been waiting for it for a couple weeks now, so I'm really trying to stay patient here and just look for the setup if it occurs. Guys, I'm using the Edge Finder to help me find my trading setups, and if you don't have a copy, 2 things you should know about. One, you can get a free version, which is now available on our website. Again, 100% free. We have a free variation of the Edge Finder. It does have limited features. I'll be upfront about that. You're not going to get all the features for free, but we do have a free version available, which you can check out by using the link in the description. And if you don't, if you want the premium features, the smart money tracker, the Fed tracker, GDP growth and data, inflation data, unemployment data, if you want to access all that stuff, you can also take advantage of the promo code that's linked in the description to get access for a discounted rate on our product, which we work really hard at building here at A1 Trading. Thanks for watching today's video. I hope this was helpful to you. Happy trading this week, and be safe going into the CPI report. Have a great day. It looks like you made it to the end of one of my videos. Thank you so much for supporting my content. It really means the world to me. And down below in the description, I put together some of my best resources for aspiring traders who are looking to improve. I've got some free downloads that could help you, some broker recommendations, and if you'd like to join our Discord or get access to some of our trading software, all of that will be linked down below in the description. Thanks for watching, and we'll see you next time.